the right stock at the right time.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. Indian Prime Minister Narendra Modi met US President Donald Trump on the sidelines of the G20 summit in Osaka. Tariffs have been at the center of recent disputes between the two nations. Market regulator SEBI has said that mutual funds exposure to debt and money market instruments will be marked to market as opposed to the earlier practice of amortization. The Reserve Bank of India expects asset quality of banks to improve further in the current financial year. The Financial Stability Report expects the gross bad loan ratio of banks to stand at 9% by March 2020. Cox & Kings has defaulted on payment of interest worth 150 crore rupees owing to cash flow mismatches and downgrades by rating agencies. And India took another step toward the semi-final of the ICC Cricket World Cup, beating West Indies by 125 runs at Manchester last night. Let's first talk about the big development this morning. Prime Minister Narendra Modi has met with US President Donald Trump on the sidelines of the G20 summit in Osaka. A host of issues ranging from trade to Iran are likely to have been discussed. Dan Tan Kate of Bloomberg News brings us more details.
It's not just the Trump G show. Trump has really been picking fights on trade with, most of the countries that are present here in Osaka, and Modi in particular. He tweeted, before he arrived yesterday that India must withdraw tariff increases immediately. He called them unacceptable. So that is likely to take place during the meeting today. Modi himself didn't actually want to raise tariffs. He waited a year before actually doing this. He was trying to get Trump to the table. The U.S. has recently withdrawn preferential treatment for billions of dollars worth of Indian goods. So Modi was backed into a little bit in this regard. But he's, today we'll see if they can come to some sort of agreement on this front.
Yeah, of course, given especially that since President Trump has come into office, he's really been trying to refocus the relationship towards Asia, focus very much on India, right? He went ahead and launched this Indo-Pacific strategy, also went ahead and changed the name of the U.S. Pacific Command to Indo-Pacific Command in a way to sort of resist China's influence in the region. So how important is this relationship for both sides?
Yeah, that's right. I mean, longer term strategically, the U.S. definitely wants India to balance China in the region, and they've shifted their language and how they refer to Asia to do that, as you mentioned. Yet these other issues keep getting in the way. We've seen trade. The U.S. is also pressuring India not to buy Iranian oil. They've also pressuring them not to use Huawei for 5G networks, and this has caused strain in the relationship and kind of undermined those broader efforts to use India more as a counterbalance to China.
Now, here's what the two leaders had to say after the customary photo op.
आपका भारत के प्रति जो प्यार है, उसको आपने अभिव्यक्त किया, इसके लिए मैं आपका बहुत आभारी हूँ। क्योंकि वो भारत आए थे, कई विषयों पर चर्चा हुई है, मुझे अच्छा लगा। मुझे आपका जो गर्मजोशी से भरा हुआ संदेश भी उन्होंने मुझे दिया। समय की सीमा में मैं जरूर 4 विषयों पर चर्चा करना चाहूँगा। ईरान, 5G, हमारे द्विपक्षीय संबंध और रक्षा संबंध, इन विषयों पर हम जरूर चर्चा करेंगे। और भारत और अमेरिका के संबंध एक दूरगामी और सकारात्मक विजन के साथ आगे बढ़े, इसके लिए हम कमिटेड हैं और उसके लिए हम प्रयास करते रहेंगे।
I think we're going to have some very big things to announce, very big trade deals. We're doing some very big things with India in terms of trade, in terms of manufacturing, in terms of we will be discussing 5G. It's a big subject nowadays. and other things having to do with like manner. So there's been a lot of fun being with you. We've had some good talks already. And again, I think you'll be hearing some very productive elements come out.
All right, well, let's shift focus now to the U.S. equity markets, where the S&P 500 snapped a 4-day losing streak. Tech shares led the outperformance of the Nasdaq, while the Dow ended marginally lower as airline stocks underperformed. Ranita Young of Bloomberg News sums up Thursday's trading action on Wall Street.
U.S. stocks swung between gains and losses on Thursday, snapping a 4-day losing streak as the S&P 500 headed for its best month since January. Investors are a little bit more optimistic that the United States and China can ink a trade deal. The much anticipated meeting between leaders of both nations will happen this weekend at the G20 summit. Meanwhile, we did see a lot of movement in the airline sector, with Boeing Airlines sliding more than 2% after the Federal Aviation Administration found new risks with its grounded MAX 737-8 airplane. Southwest Airlines is one of the biggest customers of that particular airplane, and it actually is extending its Boeing MAX 737-8 cancellations through September. Shares for Southwest Airlines were a little bit elevated during the session, and we also saw United Airlines, which is also extending that cancellation of that particular aircraft. Shares were climbing there as well. Meanwhile, we saw the dollar was on track for its first monthly decline since January, and Treasuries and WTI crude oil did advance a little bit, and we saw gold slipping, and Bitcoin, which had gotten close to $13,000, fell just as fast as it had advanced in the last few sessions. And that's a look at your Thursday Wall Street action. In New York, I'm Ranita Young for Bloomberg News.
All right, let's turn now to the Asian markets. Sophie Kamruddin is joining now from the Bloomberg studios in Hong Kong. Sophie, good morning. Seemingly a little bit of a risk-off tone at the start of trade in Asia, with all of those key meetings happening in Osaka.
Yeah, risk off indeed. We do have Asian stocks losing ground this Friday, but as we wrap up the first half of the year, the regional benchmark is set for the best month since January, and so reclaiming some of the ground that we lost in May. And today, bonds are extending the year-to-date rally, and the Japanese yen is sticking to the upper 107 levels as we wait on G20 outcomes, and there is the usual quarter-end rebalancing, of course. Now, the Nikkei 225 is under pressure today, with exporters weighing as Japan seeks to avoid tariffs during this weekend's talks in Osaka. And in this morning's data, Japan's factory output managed to expand faster than forecast in May, despite growth and trade woes. And South Korea's industrial production fell at a slower than expected pace last month, with the monthly drop in semiconductor inventories offering some hope of a recovery. Now, Korean chip stocks are trading mixed in Seoul, so the Kospi trading little changed after a 2-day rise. Now, over in Sydney, the ASX 200 is falling, but is set for a fourth weekly rise. And here in Hong Kong, the Hang Seng is opening lower after a 2-day climb, and we are seeing the Shanghai Composite looking weaker at the start of cash trade, sticking below 3,000 points ahead of the Trump Xi meeting on Saturday. Back to you.
Thanks so much for that, Sophie. All right, let's turn back to trade in India. Darshan Mehta is here to tell you all about the day's trade and also what's happening in the futures and options space. Good morning, Darshan. What's on the list today? How is it looking in terms of trade? Because the rest of Asia seems to be a little bit muted. A lot of key meetings happening both today and tomorrow, particularly between President Xi and President Trump.
Yeah, so basically a couple of things. Today is the first day of the new series, and why it's important is because 34 less stocks in the F&O. So volumes pretty much will be much low, and so these are some of the high traded counters. So expect volumes to come down. Yesterday the market corrected in the fag end of the trade. The close was not very strong. The SGX Nifty is also indicating not the best of opening at this point of time. It's indicating a downtick of 27 points. So there is clear amount of weakness that's happening as far as our markets are concerned. Now the Nifty ended with a negative bias. There was sell-off that happened in the last hour of trade, but the mid-cap and small-cap end of the market, even though corrected, managed to hold on into trade. Let's take a look at the banking index. The banking index was up almost 0.3%. The PSU banking space did manage to see selling that came in the fag end of trade. How did the ADRs pan out in trade? Again, gains coming in from Tata Motors, Dr. Reddy's, HDFC Bank, ICICI Bank. So some of the private sector banks did well. Metals, IT probably didn't do well. Vedanta was down. Infosys and Wipro were also down in trade yesterday. Now, if you look at what happened in trade, FIs actually didn't do much in trade. DIs were net buyers to the tune of 196 crores. These are provisional numbers on the FI side. As far as what led to the move on the Nifty, again, sell-off. Again, the banks did manage to do well. So HDFC, Axis, SBI, ICICI, all of them held on. But sell-off that was seen in Reliance as well as Infosys and ITC. These three have large weightages on the Nifty. That caused the sell-off that happened in the market. Apart from it, if you're looking at what happened on the F&O side of the market, remember, it's a new series this time around. Open interest build-up is almost 57%. We are about the 11,900 mark on the July series. As far as the Nifty Bank is concerned, again, there was a positive traction that was seen about the 31,300 mark. So there was strong traction that was seen on the Nifty Bank. Where are positions being taken as far as the July series is concerned? Again, 11,700, 11,800. Both of them are very, very strong support levels for the market. Probably there will be resistance coming in at the 12,000 mark. What happened in trade yesterday, since the market was absolutely flat in trade, not much happening, positions being taken on either side of the 11,900 mark. Now, the other factors we need to watch out are the India Wix. The India Wix was down almost 0.7%. The markets didn't do much in trade yesterday. These are the PCR managed to come off 1.51 versus 1.60. Let's take a look at the Nifty Bank PCR, and that. Okay, the other stocks is some of the stocks in focus, and the stocks in there are no stocks in the F&O ban, but let's take a look at some of the stocks that managed to move up in trade. Container Corp saw high open interest build up. NMDC, Ambuja Cements actually saw open interest build up of 60% on the short side. So these are some of the trends that you saw on the F&O side. Thanks so much for that, Darshan.
All right, let's talk about what's making headlines across the globe. Selina Wang of Bloomberg News brings you the first word headlines.
The Iranian ambassador to the UN says European powers are failing to prevent his country from reaching the 2015 nuclear deal. The EU says a special payment vehicle designed to circumvent U.S. sanctions is almost ready, but Iran's envoy says it may not suffice. European signatories to the 2015 accord oppose President Trump's decision to abandon it, but have struggled to find ways to maintain ties to Iran. Indonesia has ratified the re-election of President Joko Widodo, throwing out a challenge from his defeated rival. The Constitutional Court ruled that former General Prabowo Subianto had failed to prove his allegation that millions of fake voters and biased state institutions combined to help Joko win. The decision was not unexpected, as the appeal documents were mainly printouts of local news articles. The front-runner for UK Prime Minister Boris Johnson is refusing to rule out a no-deal Brexit, and he's facing growing resistance from within the Conservative Party. He's also being vague about the possibility of suspending Parliament to force a hard split through. Outgoing PM Theresa May has indicated she is willing to vote against Johnson and his rival Jeremy Hunt if they pursue a no-deal divorce. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Selina Wang. This is Bloomberg.
All right, market regulator SEBI has finally imposed curbs on mutual fund investments made into debt securities. The SEBI board, which met on Thursday, that is yesterday, has lowered the cap on exposure to individual sectors and companies. Significantly, the chairman was also quite clear that the regulator does not recognize the standstill agreements that have been entered into by some of the mutual funds with certain borrowers. Sajid Mangat is here to take you through the details.
The board of SEBI came out with key decisions after this board meeting, which included strengthening of risk management framework for liquid funds. SEBI has now mandated 20% of any liquid funds to be invested in cash or government securities. Further, it has limited the sectoral limits to 20% from 25%. As far as additional exposure for housing finance companies, it has been reduced from 15% to 10%, and they have kept 5% for securitized debt of housing companies or affordable housing, basically. There's also a ban on investing in short-term deposits, debt or money market instrument which has securitized securitized obligations which are there. Aside of that, there is a graded exit load which has been brought in for up to 7 days in liquid schemes, which is going to impact the NAVs and returns for people who are investing in liquid schemes. There is another issue, regulation which has come in, which is that any incremental, borrowing or investment by mutual funds will have to be in listed NCDs or CPs or even shares. So unlisted is not going to be there. There are going to be some grandfathering or some time given to mutual funds to ensure that that unlisted exposures in these schemes come down going forward. But the bigger thing is the loan against shares, which many of the mutual funds invest in some of the debt securities where promoter shares are kept as securities or collaterals. Now this security cover has been increased to 4 times from 1.5 to 2 times currently. That makes it very difficult for promoters to now raise funds from mutual funds through debt instruments there. Aside of that, the board has also approved superior voting rights in DVRs, but there have been some safeguards which have been put in place so that minority shareholders are not oppressed because of the superior rights. There's further disclosure standards brought in for pledges. In fact, the entire issue of pledges by any name or by any instrument is now required to be disclosed, and if promoters or person acting in concerts total pledges exceed 20% of the paid up capital, or for that matter 50% of the shareholding, it has to be disclosed and kept disclosed to the stock exchange and kept on the website of stock exchanges there. SEBI had also backtracked with respect to royalty payments, which requires an approval of shareholders. SEBI had earlier proposed 2%, which was supposed to come in from April 1 now, and then it deferred it to July 1 in a board resolution today. That has been enhanced to 5% of consolidated turnover of a company, and beyond 5% is when the shareholder approval requirement comes in, and related parties will not be allowed to vote in those resolutions. So these are some of the key highlights that came in from SEBI's board meeting.
All right, so very key updates with regard to debt investments by mutual funds as well as pledged shares. So in fact, if you want to read that story in more detail, it's available on the website bloombergquint.com. Now, the Reserve Bank of India's stress test flags several risks emerging in the financial sector, but the Reserve Bank of India says that the recent crisis has only increased discipline in the NBFC sector. Advet Palepu Rao brings us the highlights of the RBI's Financial Stability Report.
In its Financial Stability Report released on Thursday, the Reserve Bank of India found that the top 5 housing finance companies have around 49% of their portfolio concentrated in non-mortgage loans. This is up from 29% back in March 2016. Over the last year, housing finance companies have reduced their debt market borrowings in the form of commercial papers and debentures, and have increased their reliance on bank borrowings. The RBI says that this is unsustainable and could lead to adverse selection by housing finance companies in terms of how they select their mortgage portfolio, because banks also compete for space in the home loan market. In its stress test, the RBI found that the top 5 housing finance companies pose a significant risk to the banking sector, because if these companies took on large losses, they could lead to losses for the banking sector as well. Similarly, NBFCs have faced a tight liquidity situation over the last year, owing to the collapse of the ILFS group back in September 2018. Over the last year, NBFCs have reduced their debt borrowings and increased their bank borrowings, similar to their HFC counterparts. Banking sector now has a 50% exposure to the top 10 NBFCs and an 80% exposure to the top 30 NBFCs. The RBI says that the liquidity conditions over the last year have also led to a degrowth in loan portfolio by the NBFCs from around 21% in FY18 to over 18% in FY19. In conclusion, the RBI says that the past year has enforced market discipline amongst NBFCs and HFCs because stronger and better rated companies have been able to tap the bond markets, while weaker companies have had to face higher borrowing costs. The RBI also says it is time to step up its vigilance and surveillance over the NBFC and HFC sector.
All right, sticking with the financial stability report, the declining trend in bad loans for Indian banks is likely to continue through the current financial year as well, according to the RBI. Pallavi Nahata tells us the level that these bad loans are likely to settle at and the reason for the optimism in this report.
The Reserve Bank of India expects bad loans to continue to fall in the current financial year as an early turnaround in asset quality is expected to sustain, according to the RBI's Financial Stability Report. Gross non-performing assets of all banks are expected to decline to 9% by March 2020 from 9.3% in March 2019 under the baseline scenario. For public banks, gross NPA ratio may decline to 12% by March 2020 from 12.6% in March 2019. Private banks are expected to see gross NPA fall to 3.2% from 3.7% in the same duration. Asset quality across broad sectors improved in March 2019 compared to in September 2018, except agriculture, which showed a marginal increase in gross NPA ratio. Improvements in asset quality in the industry were noticed across all bank groups. Bad loans were the highest in basic metals and in the mining sector. In basic metals, gross NPA ratio stood at 28.5%. In the mining sector, bad loans were at 26.7%. Banks are also looking healthier in terms of the amount of provisions and the capital they now hold. Provision coverage ratio of all banks rose sharply to 60.6% as of March 2019 from 52.4% in September 2018 and 48.3% in March last year. Capital adequacy of the banking system has also improved because of capital provided by the government to public sector banks. Still, some lenders will need additional capital according to the RBI stress tests. 5 banks may have capital adequacy ratio below the minimum regulatory level of 9% by March 2020 without taking into account further planned recapitalization by the government. However, if macroeconomic conditions deteriorate, this number could go up to 9.
All right, so some positivity there with regard to the baseline predictions. Let's head over to Mishika Parak, who's joining us now to tell you all about the stocks and news. Morning, Mishika. What's on your list today?
Good morning, Alex. Not a very long list today. The first on my list is Cox & Kings. So they've defaulted on payment of commercial papers worth 150 crore rupees, and the company says that this was due to a mismatch in cash flows. They've repaid 2 investors rupees 50 crore rupees out of 200 crores due on June 26th, and the remaining 150 crores will be paid through internal accruals and asset monetization. Then we have Sadbhav Infra. CARE cuts ratings of subsidiary Rohtak Hisar Tollway to default from BB+. The downgrade was due to poor liquidity and debt coverage indicators. BHEL is next on my list. NMDC served a notice to BHEL for termination of contract for a new material handling system, as BHEL was not able to complete a 1394 crore rupees contract awarded in 2011. The completion date of the work was Feb 28, 2014, and now NMDC will explore new options to quickly complete the work at the project. Then we have Excel Industries. The board approves acquisition of chemical manufacturing unit of Net Matrix Crop Care in Visakhapatnam for 94 crore rupees by way of slump sale. Lastly, let's look at the important bulk deal. Rimco India acquired 83 lakh shares, which is 1.64% of Aster DM Healthcare at 120 rupees each. True North was the seller for this transaction.
All right, thanks so much for that, Mishika. Well, You know, and we've been speaking about it, world leaders have gathered for the G20 summit in Osaka, where they're likely to crack new trade deals, among other things. But the agenda for this year is actually much wider and also includes subjects like climate change, climate action, and female empowerment. Bloomberg's Karumi Mure tells you more about what you should expect in this summit.
What is the G20? It stands for the Group of 20, a forum of governments representing 2/3 of the world's people and 85% of the global economy. Membership is all about money. The group includes the G7 nations, Canada, France, Germany, Italy, Japan, the UK, and the United States. These countries also meet on their own at, you guessed it, the G7 summit. Then there are the 12 other smaller industrialized countries and emerging markets. All these 19 countries plus the EU make up 20, and they meet every single year. The G20 got its start in 1999 as a place for finance ministers and central bank governors to talk about the world's money problems. But in the wake of the 2008 global financial crisis, it turned into a full-blown summit where presidents and prime ministers come together for 2 full days and talk about the world's pressing economic issues. The agenda at this year's G20 summit include female empowerment, climate action, employment, and trade. Although Japanese Prime Minister Shinzo Abe is playing host, Donald Trump will likely take the spotlight, as he usually does. He already has plans to meet with 8 world leaders. The biggest of all will be President Xi Jinping of China. Investors around the globe are waiting to see if the world's biggest economies can figure something out to avoid escalating the damaging trade wars. What will come out of the G20 and all of the various sideline events? We'll keep you updated on the latest at TikTok.
All right, on to the ICC Cricket World Cup, and India took another step towards the semi-final of cricket's most prestigious event. The men in blue beat the Windies by 125 runs at Old Trafford, making it their 5th win in 6 matches. Skipper Virat Kohli was man of the match for his 72, while Hardik Pandya and Mahendra Singh Dhoni played handy knocks. Among the bowlers, Mohammad Shami was on fire once again and picked up 4 wickets, while Jasprit Bumrah and Yuzvendra Chahal picked up 2 each. India now moved to the 2nd position on the points table and will play England on Sunday, that is the 30th of June. All right, that's all you need to know going into trade today. Do remember before you go that there is a special show at 10 a.m. today that talks about rollovers. We have Amit Shah of BOB Capital Markets who's here to talk to you about that. So do stay tuned. There's a lot more coming up on Bloomberg Quint. Thanks so much for watching.